Okay guys, today is Saturday the 2nd of July and haven't really done any of these videos or updates lately. Haven't actually been trading much at all, so took a bit of a break from looking at all this stuff, which is good, so a bit refreshed now. But yeah, so quite a bit happening, and I'll try and keep this as short as I can. Might have to split the video up or something like that, but it's quite a fair bit I wanted to show you anyway. But start with the main markets, the stock markets and stuff. So the S&P. So I won't talk too much about Brexit, but after Brexit, you saw the volatility that occurred, and I think we're going to see more of this in the coming weeks, months. I won't get into the geopolitical side and all that kind of stuff about it, but this is kind of expected. Like all these events just happen to line up when the market is about to do these corrections. All right. So what I mean by that is when you look at the market, when you look at a chart like this, right, you can see how the market's gone up and had these dips, right? These dips. So this is in weeks, okay, guys? This is weeks. This is a weekly chart. So each bar's worth a week. So you got 4 weeks of relative downside, and you got about 10 weeks or more of upside. Then 2 weeks, 3 weeks of downside. It's just a cycle. That's how the markets work, right? So it's funny how these announcements or these big events are always timed around. Maybe it's coincidence. I don't know, but it's always timed around areas where the market is expected to correct. Okay, so these are predictable, right? These aren't like, oh yeah, these just happened. If you know about technical analysis, you can identify when these moves are about to happen. Not to the day or to the hour, but you know that it's due for some short-term correction, right? So these things are just noise, right? So it's like the euro thing last year, same thing. But the next time the market's about to correct, you're going to see some other event that comes up as well. So just keep that in mind. Don't think that every event that the media make a big fuss about is going to be, every time the market goes down is going to be blamed on some particular event. So it's just the way it is. And you got to remember that the market is, it's not just one market. It's not just the stock market. You got the bond market. You got all different types of markets. So one event can't possibly affect every single one of them in a major way, right? So it's just an excuse for them to make the market, reverse or turn around, for the next cycle, right? So anyways, so just looking at the S&P 500, so we had, this week was a pretty big up move, and we kind of suspect that, after last week's Brexit, the big down moves, this is a correction. Now the question is, looking at the weekly chart, where is this going to go, right? So this is a very bullish candle, right? It's now this is where it gets a bit tricky, because this is kind of an engulfing candle, right? It's bigger than this candle here, right? But we didn't close above the highs, right? So we closed just pretty much just right at this level here, which is telling me something is not right. Okay, if this was to close above, engulf the entire candle, which is why we call it an engulfing candle, then you would say that this is going to be prime for new highs. Now, I might be wrong. We might see another candle next week where we do get this, right? I don't know. What I'm saying is that this is telling you something. This is saying that, this is a good example here. You can see the candle here. We've got this, you had this candle here, you got this big bullish engulfing. It's pretty much almost engulfing, right? But we didn't close above that high. Then the next weekly candle was pretty much a bearish, a doji candle. We reversed. Same thing here. We had the, not quite an engulfing candle, and then some indecision. So we might see some indecision this week, or next 2 weeks, and before we see some move down. So, but if this is truly a bullish candle that's signaling higher prices, then we should technically see some more bullish momentum next week. That's just my thoughts on it. It's how I analyze it. But you got to look at all the other markets too, right? So, this is just the S&P, but if you look at, say, I don't know, the IWM or the NZDUSD, right, which are the leading indicators usually, the IWM is similar as well. We had the reversal candle, the market went down, and now that it's coming back up, this is just a correction. This is just the market taking some profits, right? Market comes down, market goes back up, right? Just a correction. So we could see a move down, or we could see a continuation to the upside. I don't know. All I'm saying is that you got to look at a lot of different things to kind of build a picture or build a case for entry, right? So Same thing with the NASDAQ, similar move as well. So, but I want to go back quickly to the S&P because I wanted to show you kind of looking at the daily chart as well. So, so I'll just go back to the daily, and you know, you can see here what happened was this is Brexit here, you know, big down move and subsequent move there. And then the market just, you know, capitulated to the upside. So this is the kind of the up move that I was talking about last time, where we said you'd like to see some capitulation, right? Now, question is, it's kind of come into a reversal area, right? So you can see here, you got this is a bit of an area of resistance, right? Now, the buying has been pretty low, right? It's coming into a reversal level. So so, you know, it's likely we're going to see some kind of short-term reversal. Now, the question is going to be, how short-term is this going to be, right? Are we just going to see some minor correction like that? And then we see like a break above, you know, to close above these levels, make new highs? Don't know. You've got to go down to, you know, maybe a lower time frame to have a look to get an idea. But this looks, you know, it's not really giving me any clear signals. I wouldn't really want to be risking too much to take a big short position. But if you go down to 4, this is where it gets interesting. If you go down to 1 hour time frame, you get a better indication of what it's doing, right? You can see the market's kind of pressed back up there, and we've done this ascending kind of move here, right? So generally when I see these, you know, at some stage you might see a bit of a correction, but you're going to see some upside movement. Now, if it goes up, are we going to hit the double tops and then reverse? Who knows, right? We just have to wait and see. But if this is a true reversal, then, you know, we'll definitely get some reaction here, right? We'll definitely get the market potentially reversing down. But whether it goes down and, you know, follows on from that, we don't know, right? But, you know, you've got to be really careful with taking a position here, because when it does reverse on you, it can really be nasty. So that's the S&P, right? But, you know, it's hard to say at this stage. You don't want to be putting too much on the table. Just to be careful with the markets at the moment, right? So, the NASDAQ, pretty much the same deal. So we'll probably likely get a reversal as well. But we're kind of putting in this setup that I tend to look for. You know, where the market kind of puts in, you know, lower highs, right? Set of lower highs and lower lows, and then on the third test to form potentially another lower high. You tend to get it sets up for a particular strategy I like to trade, where, you know, you're looking for the market to test this level here and then correct, right? And then on the third test, potentially you might see a breakout. Now, you know, you can, in terms of the entry, you can look for the breakout first and then enter, or you can wait for the market to kind of come down to like a high probability area, look for an entry, and then enter there. So there's a few ways you can go about it, but yeah, the stock market is interesting because oh yeah, the other thing I forgot to mention too is, if you look at it from price action perspective, you can see what the market's done is it's, you know, done this and this and then this. So then we put in a, you know, I wouldn't consider that, you know, I'll probably do it like this, right? So like that there. You can look at it like in between if you want, depending on how you're looking at the charts. But, you know, so this is signaling me a trend continuation. So we're looking for more movement to the downside, right? So if this holds true, then we should see a move down there, right? At some stage in the next days or weeks, right? But like I said, you got to be careful of these false breaks, right? So what we could see, right, and what I tend to see is the market will do this, right? It'll come back down, it'll put in a higher low, and then on the reversal, you retest that level there, and then you might see a break. So that's some things to watch for, but that takes days, maybe a week or more to play out. So something to watch for. Gold is okay. Let's go to weekly chart because you're going to see it more clearly. But there is, you know, I hope these people that told me gold was shit, right, or gold has no meaning in today's societies, they have a rethink about that, because gold, this is all the years I've looked at charts, there is nothing more bullish than this, right? There is nothing more. This is telling me that this is going to go spastic, right? So all the downside that happened from 2011, that's what people judge it on. People go, oh yeah, well it's been down since 2011, therefore it's not worth buying. But if you look at it from a long-term perspective, look at this. This is the market's simply just done a correction, and this is just a standard Fibonacci continuation correction, where the market touches the 50% and then reverses to continue up. This is a typical continuation pattern. There's nothing bearish about this at all. So those people that still wanted to argue about that, just look at it. The chart tells you everything. The chart doesn't lie, right? Silver as well. And I get more people that say more shit about silver. Like gold, silver's not, there's people they just don't know what they're talking about. Silver is gonna be probably more bullish than gold, right? Now it's gonna follow gold, but once it's starting to show signs of leading the market or leading the precious metals market. And that was shown on Thursday and Friday. We had the big up move, right? Now the key level is gonna be the $21 mark, right? If we obviously when we reach that level, we're going to probably see some resistance and we're going to probably pull back a bit, right? That's okay. That's a healthy pullback. But if once it breaks the 21 and a half or $22 mark, whatever you want to say, this is going to really, really be interesting because we could really be seeing a big move, okay? Now, if you haven't bought your physical metals or anything like that, then, good luck, good luck to everything pretty much, because this is telling you something. This is telling you that people don't trust the fiat money system now. They're beginning to see the cracks. So if you think you're saving up, you're saving up your pennies in your bank account, and you're thinking that you're going to get 2% interest and saving is good and you're going to save it for a rainy day. Well, you got to think again, because every day that you leave your money in that account, you're losing value. And if the fiat currency system continues to go down or whatever, then good luck, really, good luck, because what I keep telling people is that precious metals or whatever, right, or gold or silver, it's a store of wealth, right? So an ounce is always going to be worth an ounce, right? Dollars is just used to compare us, in today's society. But really, you're measuring in ounces. So $1,000 an ounce of gold is always going to be $1,000, or an ounce of whatever it is, right? So, the question is, people say, well, how are you going to exchange it? How are you going to use it, right, in today's system? Well, I'm sure they'll come up with something, right? You're not going to be expected to, carry around a nugget of gold to exchange it for food or water, right? But, they'll come up with something, right? But the point is, it's a store of value, store of wealth. Eventually, when things do settle down and there is a new financial system or monetary system or whatever it is, you can always, exchange it for whatever currency it is, right? But it's a store of value, so it's always going to be there. It's you can't just dig it off the ground, right? It's rare. That's why they call it precious metals. So that's that there. Didn't want to talk too much about the stock market, but want to show you two particular trades that I'm looking at now, and I'm thinking that I'm going to start prepping for it because this one could be pretty decent trading opportunity, and it's also setting up the similar strategy that I was talking about before, where I like to see this kind of trend line break. So now I'll delete all this in a minute, but you can see there's quite a number of patterns here showing up, right? And this is what I love, right? Even though it gets a bit messy, but this is where you can start to do some real analysis and kind of pick some high probability areas, right? Because you've got so many choices. But you got four patterns. You got three bullish patterns and one bearish pattern, right? Now I've got a cipher pattern, which is the yellow one, and I've got a potential, and these are potentials. These aren't completed patterns, right? Gartley and cipher pattern, right? Which complete at this level here, which is the 72.5, right? I've got a bearish pattern up here that completes at 77, and I've got a deeper, bigger Gartley here completing at the 69 level, right? Now the question is, how do you play this, right? How do you play this, right? So you're looking. So I found the patterns, right? Now I've marked these trend lines here being key trend lines that the market is, respecting, right? So if I go down to the weekly, you can see here, like, the market's come back down, and now it's kind of trading within this channel, right? This channel here. Now this is where it gets in, like this. You won't. When I look at this, it seems okay to me because I've done this for so long that like, I kind of expect certain things to already happen. So what you see here is the market's doing this, trading within this channel, right? And then the question is going to be, so where does it break? Does it break up or down, right? So if it goes down here, then we might see a breakdown, or we might go back up. But if it goes up here, we might see a break up. Now, what's with the Gartley here? Why is this important? This big Gartley here that completes at 69. Why is this very important? Because what I tend to find with these setups is the market tends to do this kind of setup, and then what happens is it tends to do a fake move, right? It happens all the time in the market, and people still get surprised. But what it does is it tends to do this, and then it will kind of break down, right? Spook up the people that have stops or whatever here, and scare these people out that might have bought or whatever, and then it might tend to reverse back up. So that's one scenario, right? The other scenario is that we might see a breakdown, right? We complete this pattern, which gives us a completed Gartley pattern, right? And then we might see a reversal back up to test this level here, this trend line there, and then the continuation move down, right? So if this completes and we do that, that should hit target 1 and 2 of this particular pattern, right? So that's a couple of things that might happen, right? Now, what I'll do is I'll delete this again, and I'll kind of show you in a bit more. No, actually, I'll create a new one, so I don't have to draw that again. But these are the setups you want to look for. These ones that you just know that how they're going to play out, right? Or maybe not exactly, but yeah. So you can see the market's done this, and we've clearly broken structure, right? So we've broken this structure here, so we're now in trend reversal, and then we've come back down, we put in a retracement. Now we're looking for continuation to the upside, right? Now if I go down to the daily, I'll delete this. You can see in the daily, the market looks like it's going to head up to at least test these levels here. So the initial test will be this level here, and this is where probably the first of the few patterns will be playing out, right? Because what you're looking for is you're looking for the market to reverse. If you're looking for those patterns, if you're targeting those patterns for entry, which are the bullish patterns, which where the entry is around down this level here, these 72s, then you're really looking for the market to, as it comes down, it comes back up. You're looking for a reversal around here. Looking for the market to reverse around these levels here for a down move there. And this is on you've got to look at this at the lower time frame, okay? But if we get down there, we've got a good buying entry, right? For a move up to maybe test this level here for target 1s, then target 2s there, right? Now, the good thing about this is that you'll know pretty soon whether those two patterns play out or not, right? Because the market's done this, right? So if this goes up and then we get a break and close above, then those two patterns are automatically out. So these two patterns can be deleted off your chart, and you're just focusing on the other patterns, right? If it goes up and if it breaks this and goes up, right? So what I'll do is I'll quickly just kind of sketch the pattern now, right? So these are the two patterns I had drawn before, right? I know I'm going a bit too fast, but I'm just time conscious. So if you've got any questions, let me know, and I'll see what I can do to help you. So so you had two patterns like something like this, right? So if this closes above, then these two patterns are automatically invalidated, right? They're not. You don't look at these patterns anymore. They're completely off the table now, right? Now, if that happens, then actually I shouldn't use this tool. If that happens and we get the break above and close above and market goes up, then you've got another pattern. You've got a potential. You've got a potential Gartley pattern, I think, on this level here. I have to pause that quickly, but yeah. So I want to kind of show you that. So if we get an upside move, then I guess we can look for the there's a potential Gartley pattern forming here, right? Now again, I'm gonna have to measure it all up again, but potentially another Gartley pattern there, right? So you're looking at another reversal trade around there too. So that's a pretty good area to look. High probability reversal area. Now targets would probably be, you know, around these levels here. If you were to take an entry there. So that's one thing that could play out. The other thing that could play out is that the market does, you know, it does reverse here and it comes down, completes, sorry, I'm talking a bit too fast, but, sorry, where is it? The market does reverse at this level and then it comes back down here to complete one of these patterns, right? Either the cipher pattern or the Gartley pattern. For an entry long, right? Now, if that's the case, then, you know, again, I'd be taking just targets as well. I won't talk about targets too much because then it gets too messy, but basically what I'm trying to show you, and hopefully I didn't confuse you anymore, but what I'm basically trying to show you is that with these, you can kind of come up with various different ways to analyze, you know, what the market's going to do. So that when, you know, as the days tick, you know, as each day comes by, you know, you kind of got, you know, you've narrowed down your scenarios, right? Before you looked at this, you were like, what the hell am I going to do, right? But after doing this, you've narrowed it down to two or three possibilities of what you want to see, whether the market's going to break certain levels, and if it breaks, then that means that therefore, you know, two patterns will be off the list, and then you're looking for something else, and then, you know, that's how you do it. You're going to do it day by day, but so I'll probably leave this one. I'll probably do a separate video on kind of just track this and show you what's going on there. But so that's that. I won't talk too much more about that. But we could see 69s, you know, in the coming weeks, I guess. But yeah, we'll just leave it there. New Zealand dollar is also one that I'm looking at. Now, what I'll do is I'll delete this stuff there. But what you can see here is New Zealand dollar has been interesting, right? So it's, you know, I didn't think it would, you know, do this, but anyways, you know, we've got markets doing higher highs and higher lows, right? Now we're coming back into this level here, which is a typical this is an obvious reversal level, right? So you can see the market's pressing into previous structure, right? Now, and then the market reversed, obviously, the next thing came back into structure, and then we got the retracement. Now, question is going to be, so what's the market going to do now, right? So the market's coming back up, right? Now, what we're looking for is a potential counter trend trade. Okay, so counter trend trade, if you look at it from here, this is the market's basically simply doing a correction, right? So I'm banking on the fact that, you know, the market's reversed into structure. That's the first thing. Second thing is we've got the market putting in a 61% retracement, which is typically a reversal, kind of a sign of a reversal or continuation, however you want to look at it. If you're looking at it as a continuation, then you want to be drawing your fibs probably from up here, where you get the 38% or the 50%, right, as a continuation. But yeah, it just depends on how you look at it. But anyways, the important thing is, you know, we're looking for the market to go down, basically, right? So we've already got the reversal, which is good. Now we've got the retracement, which is what we're looking for as a confirmation. So if the market heads into, say, this zone here, within this zone here, then I'll be looking for a potential shorting opportunity for a move down, right? Now, you know, but if the market goes up and then closes above this level here, right, then you're looking for continuation, and that down move is no longer likely. You could see a false break, who knows, but you know, just see how it goes. Now, the other thing that could be this could be showing us is that, you know, we could be seeing more upside, and this is just purely a consolidation, kind of market's consolidating. If so, we see something like this, then, you know, it's likely we're going to see some more upside, right? A breakout to the upside. So that's something else that could play out. So it depends how you look at this, right? So that's why you got to kind of, you can take the trade without, you know, you can take the trade and take targets, or partial targets, but don't expect the market to continue down, right? You don't know yet until it actually goes down, right? So this could really just be doing this, right, for the next few days or weeks. So that's a couple of things to look for. But, you know, you always kind of take at least partial profits and at least let the others ride. But this is a good trading opportunity there. So, and if you go down to the 4 hour, you can see there's a potential bat pattern, right? So actually, I'll go to 1 hour. 1 hour, make it easier to see. Actually, 4 hour, that makes it worse. So on the 4 hour, you know, you see the market's done the press. You know, that's obvious there. And the mark, and you know, it's setting up a potential, right? So if you have to look, so knowing, you know how I drew the zone before, I said this area is like an area I'd look for, right? So that's where you'd look for, but where would you actually pinpoint the entry? Because you know, you want to look for the best entry, right? And then you want to look for an entry signal, a confirmation signal, right? Which is basically a candle. It could be a candlestick pattern or price action, whatever it is. Or whatever, but you want to look for confirmation, right? So in this example, right, my confirmation would be probably the bat pattern, right? Because I know the rules, it meets the rules, right? It looks like it's going to meet the rules, right? Which is the market does an X to A, A to B, right? B to C. Gosh, it's fucking sensitive, this bloody mouse. C to D, B to C, and then C to D, which completes at the 88%, right? So if the market comes into, say, the 72.5 cents, I'd be looking for a shorting opportunity, right? My targets would be, if I had to go with the standard, you know, bat pattern targets, right? Then my targets would be, my first target would be at the 38%, which is here. Right, my stops would go about there, so I'll be risking this much to gain this much, which is almost a 1 to 1.5 ratio, which is good. This is a good level too because the market presses into previous structure. You've got 3 structure levels, 1, 2, and 3 there. If you're looking for secondary targets, you're looking for the 61% there. And again, you've got some structure here at these levels too. You've got 3 structure zones here, four structure zones here. So that's setting up to be potentially a really, really good trading opportunity. You know, and also if the market does this, right, if we reverse there, we come back down, we hit target ones, right? We hit target ones, most likely we're going to see some retracement, right? Like that, something like that. And then if we do go for target twos, then we're looking for a move down there, right? Now this is setting up for something else, which is one of my favorite strategies, right? This trend line kind of breakout strategy, right? So if I draw a trend line, and this is assuming that we actually reverse there, right? I could be completely wrong, but if the market reverses there, and you know, you draw another trend line, say around there, it doesn't have to be exact, right? It's not a science. You know, you're looking for potentially the market kind of doing this kind of setup, right? Which is, I love seeing this setup because I've seen it so often, I just know how it's going to work out most of the time. So if the market does this, then you're likely going to see some kind of move like that, and then a break below, right? And then a break, and then a retracement to retest that trend line there for a continuation move down, right? That could happen, or it could just completely go up like that, and then break above this level here, and then pull back, and then go back up, right? So a few scenarios really, but you know, this could be playing out, but I'm banking on the longer term perspective. I'm banking more on a downside move, right? And I'll show you why without looking at the lower time frames. I'll show you why I say that, because actually, if I go to the weekly chart, you can see that, you know, I've been saying that, you know, although all the ups and downs is just intraday noise, right? You got to look at the bigger time frame, right? The bigger time frame is telling you is that this is on the weekly chart, right? So I'm drawing it from 2009, right? So the market's done this, right? You know, clearly, you know, bullish, right? Until it gets to about here where you get some signs of some bearish signal. Then the market presses down, right? We break below structure. So now we confirm the bearish move. Market corrects, right? We get into structure, then we get to continuation down, right? So now it's gone down. Where has it gone down to? It's gone down to previous structure support. So that's why the market's reversed it. We've got some support here that the market's looking at, right? So there's some support there too, but hasn't reached it yet. So now the market's kind of pressed up, right? So everyone's thinking, oh, it's going to be all good now, but this is just a correction. This is just a correction in the overall big scheme of things, right? So right now the market's corrected, right into previous support, which has now become resistance, right? So with that in mind, if this plays out, then we should be seeing a move down, a continuation down. This is on the bigger time frame, okay? So this is more of a swing position trade. So you could look for an entry there and just hold it, I guess. But but if it does go down and break below these levels for new lows, then the first level you'd be looking for targets would be at this level here, which would be the 58s, 59s level, right? Initially. Oh, well, you look for it down here first, 62s, but then you look for follow-on targets around the 59s. So that's that there. My dogs are just play fighting. So that's that there. Shit, it's already gone 30 minutes. I want to quickly talk about the pound USD. So, big down move as we expected, we saw. So, it's broken, made new lows, new lower low, lower close. And you can see that, it's breaking these structure levels. So this is a bearish signal already. Now, I'd be looking for a counter trend trade, potentially, for a big move up. Okay, so just keep an eye on that. I'll talk more about that next time, but it's already gone 30 minutes, so I'll leave it at that, and best of luck. I'll talk to you guys soon. Cheers.